Welcome everyone. Today is Wednesday and today is about mastering the sentiment data for the low risks and high reward trade setups. Okay, so we have a lot to talk today. Not that many, not that much, but we do have a few things to talk about, especially regarding US dollar, yen, euro dollar, Aussie dollar as well, and Aussie CAD, pound Aussie, pound dollar, that kind of setups. They are not as high reward. Okay, so they're very, like, I would say medium risk to high risk, but the rewards are not the same as I could find something like on US dollar, Japanese yen, for instance, or even euro dollar for another instance. And as I mentioned yesterday, a few trades about already on US dollar, Japanese yen, and euro dollar and Aussie dollar. And all of those trades are actually in the right direction. So if that's your first time, what we do here on Wednesdays is I mark up my trades with everyone right here, and I give you the stop loss, the take profit, and where would be most suitable for the entry. And from there, we can discuss either we would take that trade or not based into the sentiment data. Okay, sentiment data is what we use from FinLogix. All right, so I'm gonna show you guys in a minute. But let me just check if there is anyone new today to give the welcoming. Wishing you the best of luck. Thanks, Switz. No, I don't think there is anyone new. I've always seen those names around, so that's good. That's where we're going to be majority of the time today, between charts and the FinLogix website. I've done two trade ideas, as you guys can see over there. So short euro dollar and long US dollar Japanese yen. And these are the ones that I've brought up today onto the webinar as well. As you could see on the first slide that I've mentioned, euro dollar and US dollar yen. So how to get access to FinLogix is pretty simple. You can just type on Google finlogix.com and click enter, and that's the website you're going to get. Besides this, you can just also go into the meeting chat that I've just sent you the link, so you can join over there as well. Not join. You can click into that link and it will be redirected to this website. Now, that being said, if you go into tools and you go into market sentiment, just wait a little bit to load. There we go. Perfect. The tool gets refreshed every 15 minutes. So every 15 minutes, we get new, I would say not new, but we get an updated version of the most recent market scenario. And what we want to do here is we want to trade the opposite. We want to trade the opposite of the biggest percentage. Okay. So let's say the biggest percentage is on the short side, as right on the first GBP Japanese yen, we can see that that 97%. Sorry, 97% is short, and the remaining, that's the 3%, are long. Okay, so what we want to do is we want to do what the minority is doing. Right, so I've selected a few ones that I think, and from my understanding and from my sort of opinion, would be the best ones so far for this week. So we're gonna go, and these are the ones I've mentioned right here at the beginning: US dollar, Japanese yen, euro dollar, Aussie dollar, and Aussie CAD. So we're gonna be looking at those ones today. We only look at Forex, but there is an offer as well for commodities and indices, okay? So for those who are long on gold, you can clearly see that the majority of the market is already long. So therefore, most often, gold would continue to fall, Okay, so just should just bear that in mind. So let's jump right across on the first one, that is US dollar Japanese yen. So US dollar Japanese yen we have right here, and it's as only 37% of people buying that. So what would we do? Would we sell or would we buy? Well, we would do it exactly the opposite of what the majority is doing. So um, what we would do is we would like to long. Okay, so let's have a look into US dollar Japanese yen. Perfect. Let me just go for 50 minutes. There we go. Okay, so let me take this off. So we yesterday have mentioned about a possibility, a possibility of a continuation up for the US dollar Japanese yen. Okay. Therefore, what happened from yesterday to today was that actually we had a bigger pullback. Okay, so yesterday when I've mentioned that was the market was around this area. Okay, because it was on the webinar and that's 4:30. So remember, since then, what we had was we had a pullback from there to levels of 147,800, 147,800. Okay. It's a better opportunity when we're thinking to buy. It's a better opportunity for us to be looking to, on a better price, on a cheaper price. So with that said, most likely what I would like to do here is if we have here, if we have a support, that's exactly what we got over here, and there is a potential to continue to go higher, I have a few options. First, I know I want a long, so I know the direction of the market already. So I will be looking to be a buyer into the US dollar Japanese yen. So my target range would be between 149. See, there you go, 149. So 149 and 150. Okay. So yes, I know it's a bit of a stretch. It's actually 100 pips difference. But bear in mind, we're trading a 50-minute chart. So that move here of around, let me check. Oops, sorry. Of around to 149, we're talking about around 0.6%. So not even 1%. So that's 90 pips. And to 150, we're talking about around 1.28, 1.3, and that's 192 pips. Okay, so that's quite reasonable. So what do I think it could be worth a while here would be to have a long position, but a pending order. Okay, so let's just jump back into Finlogic so I can go into the economic calendar because I want to show you guys just to remember about what we got coming into the days. We got there we go. So we got today, Wednesday, at 11:45 p.m. the Canada interest rates decision. So the Bank of Canada interest rates decision. Okay, it's widely expected to be maintained the same, so no changes, but that will definitely have some effect into the market. And especially when we have the monetary policy report and also the speech that will be into Thursday at midnight 30. Okay, so 45 minutes later. And so we'll be really realistic. It won't have a direct effect into the Japanese yen, but it will have an effect into the US dollar. So if we trade in US dollar Japanese yen, for instance, therefore we have to be worried about all positions. So what I would do here and strategically position myself is trying to find a better place to enter and don't enter into market price. The reason here, the reason for this is quite simple. Okay, so we are basically losing if we place the trade right now. Okay, so let me just make those two people join us. Cool. So if we're making the move now into the market, okay, right from there to now, we're talking about 90 pips. Okay, if we just wait, literally just wait and place a limit order a little bit below over here, we're talking about another 120 pips. So from 90 pips, we're going to 120 pip. Okay, that's really great. All right, so that's the opportunity cost right there. I prefer to wait, and if it doesn't get rich, if my order doesn't get rich, I just, yeah, simply move on. So what I would like to do is something around these lines. I would like to wait the market to come back at that support area, retest that, and then continue to the upside to 149. My stop losses would be below these lows, and that gives us a really great risk reward trade. And that's the first one, okay? And you're going to see why I say that. But you have 118 pips take profit and a 34 pip stop loss. It's literally triple um, of your stop loss into your take profit. So if you put $100 as stop loss, you would be probably getting around 340 to $330 back into the take profit if that ended up going into our position. But otherwise, you could lose the $100 as a stop loss. Okay, or $50, you would be getting around $170 back, or around $150 back. Just depends on the commissions, the spreads, etc., and the swaps. Okay, if we ended up to be holding that position for longer. So the plan here is not to hold those positions, not to hold this position for longer, maybe up to, I would say, max next Tuesday, next Monday, because with that, we already know if the market has been moving to our side or not. Okay. So with that being said, now let's move into the next trade idea that is a little bit. I would say that this exactly one that you guys are seeing, it's a little bit more of a sort of a risk setup inside of a risk setup because there's a very tight stop loss. Okay, very very tight stop loss, but there is a huge reward for that reason because it's a little bit more risk into that. Now, if you want to play a little bit more safe, but also you want to play more on the other side of more like a swing trading, would then look to target 150. Okay, so targeting 150 still give us some good risk reward. I'm just not too sure. Yeah, I think I would place my stop loss below the lows of this week of this candle. Okay. So, yeah, there you go. So you would have pretty much 218 pips take profit to a 53 pips stop loss. So that's really, really great. So let's say if you're putting $100, $100 is your stop loss, you would be getting around $400 to $390 as a take profit. Okay. As of here, if you're putting 100, you're getting out $330 to $300. Okay. So at the same time, there's no big difference. It's $100 different, let's say. So basically, it's 100 pip difference. But if the position goes actually into our way and you would like to extend that, there's a few ways you can do this. So if you just look back We have the highest point of the year so far being 142. Oh, actually, that's not the highest point because we have a higher point over there. But we have the highest high, the closest highest high is around 149 200. So if you, that's just if you would like to, go for 150 target. But if you would wish to continue to have that trade on to the portfolio, what would recommend you is to close maybe 50% of your position, or maybe even more, maybe 60, maybe 70. It just depends on how you wish to proceed, how you want to do. And from there, then you put your stop losses into break even, just manage that risk if if the level of 149 to 100 gets broken. Okay, gets broken. Then you can trade up to 150, right? So that's the first idea on US dollar Japanese yen. Very important here is to monitor how US dollar Japanese yen will perform from here. So you guys see that in the beginning, on the start of the webinar, this number here was around 33%, and now it's on 28. So with that pullback that we just had, it's a really great opportunity to be buying into a cheaper price. Most likely that we're going to get a higher move. Okay. All right. Hopefully that makes sense. Does anyone have any questions as I'm drinking some water? Okay. There's no questions. That's good. Sounds like I've explained it pretty well. Now, the next one is euro dollar. As usual, euro dollar has to be in the book. So euro dollar is completely the opposite of what we're looking to do with US dollar Japanese yen, right? Because when we have US dollar Japanese yen, what we really want is to go with the flow on the US dollar. So we want to buy US dollar Japanese yen. As of on the euro dollar, we want to continue buying. Sorry, we got a question here. Adeli Milikon, do you mean like buying US dollar Japanese yen now, like at the price of the market, and then the stop losses at 147? That was basically where primarily the stop loss is. Is that your question? Sorry. 147 200. 147 200 is, yeah, 147 200 is good stop loss there. But then your risk reward is not I would say it's not a high reward. Anything below two, I'm considering as a high reward already. So I guess would be only high reward if you can target above 150. Okay, so just bear that in mind. Now, coming back to here, we already have US dollar longs from US dollar Japanese yen. What we want here is to long US dollars against the euro. So that would be euro dollar short. Okay, so if euro dollar short is around 19% only of people shorting, so that's really, really great. It's a good opportunity to be into the market. So let's have a look into the price of euro dollar. Euro dollar. There we go. Perfect. So I know a few of you have been here yesterday into yesterday's webinar, and I've mentioned about 115 being a target. Okay. So I strongly believe that the possibility of US dollar to continue to have more strength against currencies like Japanese yen, Australian dollar, pound, euro, all of those developed economies around the G10 group, it's quite big. It's a quite big possibility. So most likely we will continue to see a decrease into euro dollar. Okay. So right now we're trading at 1.15500, let's call it. We had the break, a huge move down, as you could see, more than 1% down. I'm talking about pretty much 200 pips down, around 150 pips actually. But we can see that the trend has been breaking any lows, any highs, anything from previous. Okay, so into my opinion, where we're sitting at the moment, as we can see, I've marked that down already. Let me just go because I can't zoom out more than that. I was trying to, but I can't. So from what we can see, pretty simple is that we are into a very interesting level. Okay, that if there are still buyers into the market, that's where they will be looking to place their orders. For a very simple reason. We have a very interesting wick over here. So we have lots and lots of wicks over here on this area. And that demonstrates to me that there were previous buys here. And that's why the price sort of, went up with quite of a steam. And then on Monday, it opened up with a gap and it gapped up. But then after that, it just decreased. Okay. So really simple option to do here is look to short into that support that is now a resistance. That's my simple way to trade euro dollar at the moment. Okay. So if we are having, I would say, if we are having a sell limit around 115,660, 115,660, that would be already a good place to put our orders. Okay. What about if I don't get hit? Well, then we move to the next one. Right? Sometimes the market really isn't for us on that day. So we just sort of leave that aside and move to the next one. But let's have a look into how would that position look. So over here we have the take profit at 1.15. Okay, that's where I've mentioned before that I was looking to target. And the stop loss, ideally, I would prefer to put it above the level of 1.15900. Okay, 1.15900, like 915, let's say. Okay, so ideally that would be the setup. It's a very short-term trade, very short-term trade. We can either be stopped out very quick, or we can either go to take profit very quick. We do have the Bank of Canada. It's not going to impact directly the US dollar. But because US dollar has a huge, I would say not huge anymore, but it had a huge, not anymore, but it had a huge partnership with Canada. There is also a possibility of market sort of selling or buying US dollars on the Bank of Canada. Okay, so just bear that in mind. Watch out for the spreads. Watch out for how the market will move once we get the Bank of Canada. Cool. So now the second position is if we get stopped out, there's most likely a reason for that, and the reason is the price will come and chase this area. Okay, why? Simply because there is a consolidation over there. So that shows me that the market is not yet confident of moving below these lows of 1.15200 without first touching on that and continue to go lower. Okay. So from this, what we can do is look for a second position around this level. Take profits will be maintained the same, and the stop losses would be at around 1.16 and 150. There you go. And that gives us a better risk reward. Okay. So this one is a more risky setup because, as I say, there is a higher chance of the market sort of jumping into the 1.15, 915. So from there, we would have another position that would trigger. And then the stop losses would be a little bit above 1.1615, and the take profits would be at 1.15. Now, if you trade 1% per risk, okay, there's a few different, so there's a few different ways, I would say, on managing risk when you have two positions. First one is quite simple, just percentage wise on your pips, or fixed percentage or pips. How many pips you want to stop loss? I want a 20 pips to stop loss, so you're going to have to find that. Why I don't agree much into it, because 20 pips into one pair is something, 20 pips in another pair, it's completely different. It can be 40 pips or something like that. So it just doesn't make much sense for me. Fixed pip, in a sense, a stop loss. I reckon the best way to manage the risk is into percentage, okay, from your capital and also your margin requirement. So when it comes to the capital, let's say you have $1,000. Okay, let's say you have $1,000, just to make things easier, or $500 or $100. It doesn't much matter how much money you have, but you need to be a percentage person. So if you have a account balance of $1,000 and you want to trade this setup, you would be using around 1%, and that's $10. Okay. I know sometimes we can't, have $10 as stop loss. Sometimes it's going to be a little bit more depending on to the margin of for your trade size. So 001 in this case most likely would do the $10. But you have two options. Would you bet $10 into the first one, and then would you bet at $10 into the second one? Well, no, because you looking to position yourself of 1% into euro dollar. You don't want to position yourself 2% into euro dollar. So what would you do? Well, you would position your 1% divided by 2. So that's 0.5% for each of the trade ideas. So 0.5% would give you a risk of $5 into both of them. And for the first one, you would have a return of around $11 to $10. So pretty much 1 to 2 return. As of on the second option that I gave to you guys, it's more of a, I would say, better opportunity to risk reward, as we got $5 stop loss, but we can get $15, $14 back. Okay. So it's really great. It's really, really great to use percentage and not pips. And that's just my opinion. Okay. Maybe you use pips and that works for you. That's fantastic. That's exactly what you should be doing. If you're not too sure about using pips or using percentage, then I would recommend using percentage. Okay. Just that's not a personal device. It's basically for everyone here. Cool. Next one, we got Aussie against the US dollar. So it just updated again 7 minutes ago. Let's have a look into Aussie against the US dollar. We can see that Australian dollar is onto the green side. So Aussie against the US dollar, as I say, what we want to do is we want to buy US dollars. Okay. What we do on this scenario, If you've been here yesterday, you most likely know because I've mentioned that, and I've brought again to see if you guys are paying attention. But if we are with two positions already on the book, so we have US dollar, Japanese yen, and we have euro against the US dollar. Both of those ones we are long or we are short, so meaning that we are longing the US dollar. So what we do into Aussie dollar, we don't do anything because Aussie dollar goes opposite of our portfolio. So basically, if we enter the position into Aussie dollar, what would be happening to our portfolio is we are neutralized into one position, and only one position is actually being valid now from those last previous two that we got into the US dollar, because now we have a buy US dollar and a sell US dollar. So both of them doesn't go well. We need only buys or we need only sells, and that's it. So we can actually make a profit from that. Okay. Otherwise, it will be hedged. So we don't make money from that. We just lose for commissions and for swaps. Okay. Cool. So let's move on to the last one. And I've brought Aussie dollar exactly for this reason, to show you guys what not to do. Okay. It's not only here to be. So the next one is Aussie CAD. And I've brought Aussie CAD because of the Bank of Canada, where I'm expecting some sort of a, even with Australian dollar, as I say, Australian dollar is one of the best currencies to trade when the risk is, switching from on and off. And that's exactly what we're having at the moment, because Australian dollar is a very risk on currency. At the moment, I see a little bit of risk on, but I see more possibilities of a strong hawkish Bank of Canada due to the inflation and due to the higher rates so far, that I would be looking to short the Australian dollar against the Canadian dollar. And that's exactly what the tool says to us, the sentiment tool says to us. So we have a strong sell for Australian against Canadian dollar right over here. Okay. So 85% of the whole market is looking to long, as of the remaining 15% is looking to short. So what I would like to do is I would like to short. So let's go and have a look into the chart of Aussie CAD. Aussie CAD, there we go. Perfect. So again, that's a 15-minute chart. Let me go into the 1 hour. So zoom out a little bit better. Okay. So very simple here. We can see that it's literally sideways for the last pretty much 3 months, May, June, and July. Okay, so for a full quarter, we've been into a very ranging territory, say, with some maximums and lowers around these levels. From that perspective, what I believe would be the best approach is to follow the FinLogic sentiment too and go for shorts. Reason why the another reason is because we are into actual support resistance area. Okay, so if we just zoom in here for like 4 hours, actually I can show you a little bit better. We can right here, we can see that we are into a resistance area right there at 89,666. Okay, so that being said, let's go to the 15-minute. There you go. What I would like to do here is short Aussie against the Canadian dollar. We just need to be careful into a few things. My target would be around 89. So that is over here. And that's one of the best, I would say, scenarios that we could have. So my target is at 89. Entry would be at market. Sorry. Entry would be at market. Take profit, as I say, 89. And the stop loss would be above these highs. Okay. There's a few things that can go wrong on this position. And the first one is if the Bank of Canada be very, very dovish and no hints onto inflation maintaining higher for longer or anything related to higher unemployment, higher employment and also higher productivity into the economy. So that basically shows to us that besides the inflation will remain higher for longer, we also need to be careful of that the population is still spending, and that can generate still more inflation. The population can still spending because the unemployment is low, therefore the employment is high, so people have money, so they go and spend and generate more inflation. So if we don't see that, then this would be the problem trade. Okay, but it's eventually a really good trade. It's nearly 3-1 already in profit, but depends on your spreads, I would say, but should be already in profit. So we have 65 pips take profit and 22 pips is stop loss. So that gives us, if you're risking, again, if you, let's say you're risking $5, $10, $100 into your stop loss, you will be getting back around $15, $14, around $75 to $150 to $140. So it's a good trade. It's nearly 3-1. Okay, really good trade. Now let's go over and have a look again on what we just had today. So first we had US dollar Japanese yen. So US dollar Japanese yen. So US dollar Japanese yen, what we're waiting for is we're waiting for the market to come back at that support area and then enriching our position at around 147,800, 147,812, around that area, and going to the first target of 149. Then if that happens on something like that, let me just grab my pen. So if something happens like this, and then the market actually ended up going up and break the 149,200, hit our target and break 149,200, I would be looking to close 50%. And then I would be looking to place my stop losses at break even and leave this trade to reach the main target, that is 150. Okay. Now, if we ended up get stopped out over here, we have a second position, but it's with a bigger stop loss. Okay. So with a bigger stop loss, that will be your two options to trade. Okay. A 4 RR or a 3.39 RR. From there, we have euro dollar. So moving to euro dollar. So euro dollar, we have two options, different prices, but two options. So first option is a more of a risk setup because there is a high probability of that going wrong in a sense because of the box over on the top. So market most likely will try to fill this gap of price and breach this box of around 1.15900. And then if that goes wrong, we have a second position with a stop loss above those boxes. And that is giving us 3.6 RR. And this one, the smaller one, is giving us 2.18 RR. And last but not least, we have Aussie CAD. That is a market price entry and it's already in profit. So that's really great. And we are looking to target 0.89. Okay. And with a stop loss at 89888. Okay, cool. So that's pretty much it from me today, guys. Hope you could have something out of the webinar. If you do have any questions, please bring those questions tomorrow again. I will be live from 4 to 5 p.m. Definitely will be eager to answer all of your questions if you have any. But thank you everyone for being here today with me. And hopefully see you all around again tomorrow. Thank you, guys. Have a great day. Bye bye.